Hello ladies and gentlemen, and welcome back to the channel. Today we are going to be looking at something that is very important, that is very near and dear to the market as a whole recently, and that is, what is a stock split and what does it mean? What could it mean for the future of a company? And we're going to break all those things down, but before we get into it, go ahead and hit the like button and subscribe to the channel if you haven't already. Click that notification bell if you want to stay updated on videos when they get posted. I try my best to post one video Monday through Friday at 5 o'clock, so look forward to those, and I really appreciate all the support you guys have given me on this climb to 1,000 subscribers. So let's get right into it. What is a stock split and why are we talking about it? So the big reason why is because we have two major companies in Tesla and Apple that are getting ready to do a stock split, and Tesla is currently doing a 5-to-1 stock split, and Apple is doing a 4-to-1 stock split, which are both relatively high. So let's look at what a stock split is. A stock split is a decision by a company's board of directors to increase the number of shares that are outstanding by issuing more shares to current shareholders. For example, in a 2-to-1 stock split, an additional share is given for each share held by a shareholder. So let's click on this article and dive in a little deeper. So what that essentially means is, when you look at a company like Apple, who is currently sitting around $500 a share, and they're doing a 4-to-1 stock split, that means that their price will now be $125 per share, while issuing 4 times as many stocks than what are currently out there. So if you own a share of Apple, lucky you'll have 4 shares of Apple when this goes through on Monday the 31st, which I believe, so that is this next Monday. So let's look. The primary motive of a stock split is to make shares seem more affordable to small investors, and that's the big driving factor for the next article we'll look at in just a second. A lot of this is revolving around making things more appealing to investors. Obviously, which sounds more appealing? Something that costs $125 or something that costs $500? I think obviously we're going to pick something, and it's the same product, so obviously we're going to pick something that costs $125 in this situation. And in Tesla's case, they're around $2,100. So what sounds more appealing? When you divide it by 5, what is that, about $400-ish dollars, give or take? So what's more appealing? Something that's $2,100 or something that's $400? They're the same product. And if you don't already own them, it really doesn't affect you. So obviously we're going to go with the $400 option. So potentially this is going to drive up more the price of the stock as well, even more in the near future. I don't know necessarily it should come back down to earth in the long term, unless these companies just keep exploding and doing really amazing things, like both of them are, which it wouldn't surprise me if these companies just skyrocket back up to where they were. Something that is the exact opposite of a stock split is a reverse stock split, or when a company divides instead of multiplies the number of shares that stockholders own, thereby raising the market price of each share. And in my opinion, this could be a good or a bad thing. It's really something that just depends on the company's situation. A company could go out and do a repurchasing program of their shares, and then potentially do a reverse split to just retire some of the shares that they have, or something to that effect. Not super likely that would happen. More likely than not, a reverse stock split is a negative sign. It could just be the company trying to get their share price up in value. So usually a reverse stock split, I'm not a big fan of those. But if you look, the market cap will stay the same regardless of whether it's reversed or a normal stock split. So it doesn't really affect the company's value, which is why it's always amazing when investors, something that's the exact same that it was yesterday, now it's quote unquote cheaper. Hey, I'm going to go buy a bunch of it. But it's the exact same, and you're actually getting less of that company. And then this article was very interesting to me. Apple's and Tesla's stock splits could push them 33% higher in the next 12 months, an analyst who looked at 60 years of data. And this all plays into the reason that we just talked about, which is that oh, if something looks cheaper, more people are going to buy it, especially if it's a great company or a great product. And that's just what happens here. And we're going to look at 10 brands that have carried out stock splits, the biggest being Amazon. Number of share splits in their history is 3. Average performance of shares 12 months after the split, 209% for Amazon. So say Tesla does this and they get these record numbers, that's the average. That means there could have been one, obviously there could have been one that was like 10%, but there could have been one that was like 500% for Amazon. I don't have those numbers with me, but average is 209%. That's incredible. I believe Tesla has not done this before, so it will be interesting to see where that stock heads. Just a crazy, pretty high risk, but really high reward on a stock like Tesla. Microsoft, 9 splits in their history, 47% average. So really good results from Microsoft. Toyota, 125. That one time, 25%. Really nice to see. McDonald's, 922 is their average. Good and bad. I would definitely take that any day of the week on McDonald's. Disney, 8 and 18%. Really good from Disney. Intel, 6 and 12. Coca-Cola, 9 and 11%, and then Apple's done this actually 4 times before, and their average return is 10%. But hey, if the market average is 8%, I would definitely take 10% from a company like Apple, especially just given everything that's gone on recently. A nice 10% gain would be really nice. And believe it or not, Google has done it once, and they've lost 6% of their value, which may be a reason why you see a company like Google sitting around, I believe, $1,500 or $1,300 per share. Maybe a reason why maybe they don't want to split that, or a company. Yeah, you just may not see them split again because they lost 6% the last time they did that. But that could be a factor of, this is 12 months. So say there was a recession in there or just a little bit of an economic downturn. Obviously, that all factors in. Amazon has gotten all these companies up here have done really well, obviously. And then Samsung has done it one time and lost 13%, in my opinion. So as you guys look down here, Tesla's seen a monster rally exploding 850% in the last year. In my opinion, both of these companies are heading higher, especially with the stock split on Monday. They may drop in between now and then, but I see them heading higher. I could see Apple resting around $250, $300 per share with the stock split, and I could see Tesla resting around maybe getting back up to 1,000. That's definitely not out of the realm of possibility. And here's kind of a funny story. I know I've said this before, but we'll wrap up with this. I actually was looking at Tesla around $200 a share when everything, I believe it was a little bit, it might have been in February this year, so it was before everything kind of went down. So I was looking at it, and I talked to my dad about it. I'm like, hey, some people are saying this could go to 3,000, and he's like, well, but it also could go to 0. I'm like, that's a pretty good point. I don't have a whole lot of money to be playing around with. I'm a college student. I don't really need a whole lot of risk right now, given my current financial situation. And wouldn't you know it, Tesla's at $2,100 a share today. He actually ended up buying shares of it. My dad did. And he's up quite a bit, to say the least. So, I gave him a good tip, and he gave me a bad one. And, I guess I should have listened to my gut on that one. But that's going to do it for today's video, guys. Really appreciate you guys taking the time to watch this video. If you made it to the end, go ahead and hit that like button. Leave any comments in the comment section below. If you have any questions regarding Apple or Tesla, or just what a stock split is in general, and I'll try my best to answer those questions as quickly as possible. And once again, until next time, happy investing.